Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that continuation of just sidewaysness on the Bitcoin chart. Guys, we do have to talk about a little bit of macro. We do have the CPI data coming out on Wednesday that could cause a little bit of a shakeup in the markets, especially if the CPI year over year misses its target of being very close to 3.1-ish. Okay, the last reading was 4, and so if we're somewhere near the ballpark of 3.1, within like a point 0.1 or maybe point 0.2 at worst, then I think we could be okay and just squeak by. But if this thing is like 3.5%, that could be problematic for the market. Even 3.4%, I think would be a little bit scary. But guys, we also have the core CPI, and this could be an even bigger problem because last time the core was zero point 0.4, the market expects 0.3, and that's a reasonable jump there, just given the numbers that we're dealing with. And so if this is zero point 0.4, then people are going to say, well, it's not getting better, right? It's not getting better. And also, the consumer price index is expected to be 0.3. It's expected to be worse than the previous reading there. And so, if we get over the worst number, like if we get 0.4 like we did last time on core, then this is going to really have the possibility of sending the markets down. So we're already expecting a jump from the previous time, and if it's higher, that's going to be a little bit scary to the markets. They're going to think that the Fed and Powell have to increase rates, guys. So let's just pay attention to these numbers. We want the year over year to be less than 3.1 or around there. We want the core CPI to be less than 5% or 5%. We don't want it to be higher than 5.3% by any means. And we want the core CPI here to be 0.3, not 0.4. And to be honest, we really hope for a consumer price index of 0.1 to 0.3. Anything over 0.3 would definitely shake up the market. Okay, I think I've underscored that enough. Let's go ahead and let's just do a health check on Bitcoin itself. Now, here we have the Bollinger Band's midline on the weekly, and what you can see, as I've told you in the past, Alpha Fam, is that whenever we're above the midline, we are on a bullish run, right? And whenever we are below the midline, we're on a bearish run. And so you can just see that right there, right? This is the bear market, and this is the bull market. And so when I've been saying that we're in a bull market, I haven't been being hypocritical or just mixing words or just playing politics with you guys. I've been trying to scream at the top of my lungs that this was the bottom of the market and that we had re-entered a bull market, right? So, guys, just pay attention to this because, of course, this does give us goals in order to understand where we should probably get a little bit wary. And that would be somewhere around here, around 27,500, 28,000. That's where these lines might kind of move up. If you want to give yourself a little bit more wiggle room, to the upside, then maybe 28,500 would be a decent place to consider. But hey, that's up to you guys. And for now, we're just looking fairly bullish. So I guess I can't really say anything bad about that. So there's your health check on the market. And some people just want to be permanently bearish, but I don't know what to tell them. Like from my perspective, we've been in a bull market ever since January, and that's what I've been telling to you guys. So what kind of crack are they on? If we break below the Bollinger Band midline, then I will say, yeah, let's just take a break from this trading. Let's just pause temporarily. Let's get out. If it's just a little bit of a wick, maybe not. But if we actually close a candle underneath there, that would be pretty problematic. But right now, everything just looks good, guys. Let's go ahead and take a look at the daily setup. So let's go ahead and just put a new daily setup on there. And just to jump over on the day. And you can see that we are in the current momentum pool there. We also do have a bit of a squeeze going on with the Bollinger Band, super wide up here, getting very narrow, super wide over here, getting very narrow. And then we are above the midline, so this does suggest that, at least from a Bollinger Band's perspective, we have a greater likelihood of popping to the upside. Now that could change, assuming that we do break below 29,900, and especially if we lose the RSI neutral point of control at 29,569. Should we start getting some price action, just kind of, tightening up down there, then I would suggest that, when we do have an explosive move, it could take us down to that $27,800 level, or thereabouts. We do have a lot of liquidity over here that we could attempt to grab. Now, again, on the weekly, our Bollinger midline is going to be meeting us there. And so if we do just come back down and tap that bearish control zone on the daily, then as long as we bounce off of that, that's going to be super healthy. We've done it before. We've done it before. If we do it again, I'm not going to be too worried about that. In fact, the structure that I would see being built is an accumulation wedge, which would eventually would pop to the upside. Okay, that's just the 70% statistical likelihood of that. So for me, I'm pretty okay as long as we're above, again, 28,000 roughly, a little bit of give and take, around that area. Now, a lot of guys are saying 29,500, but I just respectfully disagree. I think that we could flash wick significantly lower, and then as long as we just pop back up, I don't have a problem with that. Now, I do understand why some people are saying 29,500. They don't want to lose this shelf over here. Okay, they don't want to lose this area that we're kind of hanging on to by a thread, which also is just the bottom of these wicks, and those wicks are what can lead us into the next stage of the bull market. But I have to point out here, we have had a flash wick to the downside in this zone before, okay? And it's not like we lost that zone off of that wick, okay? It took a long time to lose that zone. So likewise, just analogically over here, if we have that same kind of zone but pushing the other direction and we have a flash wick down, well, we could just pop back up from that, okay? So this is how price action works, and as long as we don't have too many candles hanging out down here, then we're not going to get embedded beneath the Bollinger Band midline. We're just going to test it on the weekly and then bounce off, okay? It's totally cool to test it in a flash wick. All right, guys, so your volatility pivot here for the day is going to be above 30,114. As long as we're above that, my bias is to the upside. Again, the strongest play to the upside in my mind is if we have a couple candle closures, maybe 4-hour candle closures above the momentum pool. That's going to be 30,579. Then we will have added momentum to the upside, as well as having that volatility bias. Now, currently we are inside of the pool, so that means that we're just holding the hold momentum level, which means we're just chilling, going sideways. And we don't enter any type of really bullish control zone unless we put candles above 30,777 or 30,862 by the MACD, which is a little bit slower. And so, yeah, I mean, guys, we are within striking distance of that. Now, if we do break down from the volatility pivot, then we're going to be under the pool, under the pivot, And so that could be a shorting opportunity to the neutral point of control at 29,569. And again, getting embedded around there, then the Bollinger Band midline on the daily could curve around, and that could send us back down for a test of the bearish control zone on the daily at 27,822, which just happens to line up with the Bollinger Band midline on the weekly. And so I still think that this is a possibility that we have to entertain. So again, don't be a perma bear, don't be a perma bull, but if this thing is still pushing up, then maybe a flash wick and then we go, and that would be perfectly healthy, grabless liquidity as rocket fuel to the upside, okay? All right, guys, I think that covers the daily. Let's go ahead and check out the new 6-hour. And on the 6-hour, we are going to be looking for, well, it looks like we are crossing the momentum pool to the downside here, and we are underneath the volatility pivot. So the 6-hour is giving us a little clue that maybe there's a little bit of negativity in store for us. How can I define that? Well, we are pushing to the upside here, and then we're just having kind of a momentum shift. Okay, we're having a momentum shift to the downside, and that first candle can always be a fake out, but should we put in a lower high here and then continue to push down, then we would be under the pool, under the pivot, and that would be the shorting opportunity potentially to 29,831, the bearish control zone on the 6-hour. And should we lose that, then maybe those daily numbers start to play out, and hopefully we get that weekly support. Now, if this does just end up being a fake out, and if we are just continuing to trend to the upside, then maybe we'll just get a little bit of a pullback here at the bottom of the pool, somewhere around 30,362. We could have a little bit of a wick lower, but I really wouldn't be worried unless we lose this wick over here at 29,960. That would suggest continuation to the downside. And should we just put in a higher low, then we would probably recross the pool again. And again, getting above that volatility pivot, we'd be above the pool, above the pivot. And then also we would be within striking distance of the bullish control zone at 30,780. So that could suggest considerably more upside, to be honest. So we do have to watch out for that move. If I was going to be biased on something right now, I would be biased on just a little bit of a pullback here on the 6-hour. Let me go ahead and just zoom in to the stochastic there. And yeah, on the stochastic, we are around the 50%. Now, when we're around the 50%, this area can be a little bit bouncy depending on where you're located. I don't know if you can see this on YouTube, but we actually have the red forecast above it and the blue forecast below this 50% line. And so it's like literally split even. But let's just say that we pull up a little bit in price, then we could bounce off there and just continue to the upside. Let's just say that we lose the 50, then we could go all the way back to the bearish control zone. So that tends to be how the stochastic likes to test things, or in that area, And so we're going to look for that. Just right now, the stochastic is giving us a little bit of a bias to the downside. That's all. Let's go ahead and take a look at our volatility. You can see that our volatility is pushing, but we haven't reached that critical level of 10%. And, like a confirmation would be around 20%. So, this thing could easily just do either direction, and we wouldn't really be considering it to be expanding in its true move yet. Once we pass that, 10 to 20%, let's just say 15%, then we could consider that it's probably making its move either to the upside or to the downside. And we can measure it probably tomorrow based upon what the CPI data is saying. That'll give us a pretty good clue. Guys, let's go ahead and jump down to the 1 hour just for you snipers. And guys, yeah, I mean, the 1 hour is going to have a very, very thin momentum pool and is a little bit ambiguous here. One thing that we can see is that we do have a drive of, bearish divergence building up here. This is pretty strong divergence. So could it break us down from this midline? Yeah, it's possible. You can see what happened over here. Bearish divergence, the strong kind. And then we just broke past the EMA on the RSI, and then we just pushed through the middle of the RSI, and that sent us down to the bearish control zone on the 1 hour. So could that happen here? We haven't closed the hour, so this hasn't been set in stone yet. But if we do close the hour, then I will consider that to be locked up, and that bearish divergence would probably play out to the downside. So pay attention to how this 1 hour closes, and you can see the logic here where we have already gotten below this really razor thin pool. We're below the pivot, so that was actually permission to short on this hour to begin with, but we were already pushing down at the start of the hour and in the previous hour, so there was no way to catch that move. The only thing that we can do is look at this setup and that bearish divergence and say, this is a pretty heavy candle. This is a lower high off of this high right here. Maybe this structure is starting to curve down, and should we lose the candle body around 30,482, that's going to be our neutral point of control, where we're just basically kind of like chilling out sideways. Should we lose that, and especially should we lose these wicks below there, like 30,400, then we're going to be embedded beneath the Bollinger Band's midline here, and that could send us back down to the bearish control zone around 30,175. So we do have a shorting setup presenting itself here. Obviously, we're already in the middle of that, but if you consider that this is just a kind of microstructure on its own, it is a little bit of just a micro, a micro double top kind of formation. And if we break that neckline, then the measured move, would take us down, you know, something like this, something like this, at least to our little range lows here, somewhere around 30,350. And then whether or not we get continuation to the bearish control zone, it's just highly likely, by the way, that the RSI resets itself. Okay, so that's all I would say about that. And if I do just claw out of those drawings, and then let's go ahead and take a look. Yeah, we can't see on the 1 hour, it is pushing a little bit harder than the 6 hour to the downside. And also we do have a fresh jewel curvature to the downside here, as well as that bearish divergence on the RSI. So personally, with this M pattern, right, this little type of micro double top here, and pushing against the neutral point of control, I would say that it's highly likely that we have some continuation to the downside, sideways or down. Okay, if you want to see to the upside, we really do have to reclaim 30,573 and then quickly recover 30,633. Okay, because that's going to give us the edge on top of the pivot and on top of the pool. And then that's kind of your longing opportunity. And bulls get into control around 30,731. So guys, I think that's going to wrap it up for your key levels for today. I would like to actually stay on the 1 hour, and let's go ahead and review our previous two setups on the 1 hour, just because we didn't do that last episode. Just for transparency, I want to show you that this trading system actually works. Let me go ahead and get the highlighter function out here. So a couple days ago, actually, this would have been there's the start of the pool. This would have been on the 6th, right? The 6th. So almost, 5 days ago or so, we would have been pushing up and you would have had that long to the upside. You broke back into the pool. So you had that short right there, successful trade. You pushed up, you got a little trade here. You came back down, you got another trade, pushed back up. This one, it just bounced around. We really couldn't do anything with this. We did break down, so that would have been a trade. We got back up into the pool. We pushed up, got a nice trade here. Just more sideways. You could have stayed in or taken your profit, whatever you wanted to do. We broke back down here, popped back up, broke back down, popped back up, broke back down, popped back up. All of these are successful trades, guys, just as scalps. Okay, if you're leverage trading on like the 5-minute or the 15-minute, these are just scalps. Okay, that you can use the 1 hour pool for. And I'm just giving you snipe lines. And we broke back down, popped back up, broke back down, popped back up, and this is the mega trade that we got right here. And you could still be in that trade, or you could have taken your profit already. But as you can see, we never broke back down. And so even if we look over here, okay, even if we look over here, we never re-entered the pool here. And so this trade was the most successful. This is why we trade these pools, okay? Because this trade was an epic trade, and on leverage, who knows how many X's you got off of that. All right, just it's up to you if you're a leverage trader. I'm just showing you the key levels to use. And let's just go back and delete my markings just so you can just really reflect upon how well respected my lines were. Okay, look at this nice range that we had carved out. If you had had the neutral point of control, and if you had had the momentum pool on your chart, as well as the volatility pivot and the bullish control zone, I mean, look, ever since 7-6, I just want to show you, we have literally been in the ranges that I carved out for us. Okay. Is it magic? No, it's not magic. This is math. Okay, this is math. And so the price action has to respect certain levels. It has to retest things. The market has to have efficiencies. And so this is the system that I'm working on. And I just want you to admire how this was the launching spot for the major move. Okay, that was the launching spot for the major move. And so Alpha Fam, again, if you're taking these setups, just congratulations, because you guys are absolutely killing it. And let's go ahead and just take a look at the next one, because maybe you missed, maybe you missed that setup and you're saying, oh man, I wish I had gotten in over here. No, I showed you there was a dozen trades that you could have taken. And by the way, this works for the 6 hour, it works for the daily. I'm just showing you the 1 hour because the 1 hour has the most movement on it. Now, this was an ultra thin one, but I think this one, I think you'll agree, was just as successful because here we were, all right, here we were, right here on this indecision candle on the 9th, and we were saying the first move might be a little fake out to the pop-up, but if you break back into the pool, you're going to be underneath the pivot, you're going to be re-entering the pool, and so that's your permission to short. You could have taken that short, and that was an epic short to the downside. Okay, so you could have taken your profit at the bearish control zone, which I had marked out for you, or you could have taken it at this higher low, signifying a shift in momentum here. But that's up to you. You're going to have to decide how to take your profit. We were underneath the Bollinger Band's midline, and so you knew that this was likely to have continuation. And so you're following my principles. And then at some point, we did get above the Bollinger Band's midline, and we did escape the bearish control zone. And so, some traders would have taken that long right there. But for me, I use a momentum pool strategy. And so that wasn't enough of a shift of momentum for me. We were still below the neutral point of control on the RSI, and I just don't trust those moves. I want my RSI to be, with me. I want, certain things to be with me when I'm trading. And so we have the Bollinger Band. We're above the Bollinger Band. We're above the neutral point of control. We're re-entering the momentum pool. We can take that long. There's a little bit of chop in here, so there's actually multiple trades. You'd have to be on the 15-minute or the 5-minute to navigate that. Again, the 1 hour chart is for scalping, guys, okay? This is not for swing traders. This is for scalping. This is where you make just a lot of money in one day, okay? And so you can just pop up, you can play this multiple times off of the pool. Just put your stop loss at entry, okay? Break even. You go up, you go down, you get this move, 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 you get this move. And the reason why you do that is because at some point, you know you're going to hit that Bollinger Band midline and you're going to be above the neutral point of control and you're going to get into the pool and then you're going to get this epic trade to the upside. And depending on what your leverage was on that, again, like you just went to the moon on this trade. Now, most scalpers, they know like 0.5% is pretty decent. What did we get off of this? 2.5%. Okay. Now, I know a lot of people who are trading for more than 5 minutes or more than 15 minutes at a time are going to say, that's that's nothing. 2.5% is nothing. But when you're on leverage of like 20%, then you just made, what, like 50%. You just made, depending on your leverage, you could have made a lot of money off of that. And so that's what these scalps are going to do for you. And I don't know. I think a lot of traders, they're not using scalping, so I may end up just posting the hourly charts in the Discord. Link is in the description of this video below. Maybe in the future, I'm just going to do the hourly charts in the Discord because you can get the information right away as soon as I make it. And then maybe I'll just post the results on the videos in order to kind of entice you to come visit the group discussion. However, maybe you guys like to take a look at the 6 hour, right, and see how the 6 hour results. Well, in this case, I'm putting up the 6 hour right now, and you can see a very similar thing on the 6 hour, right? And so even if you weren't trading on the 1 hour, you could have been trading on the 6 hour, and I'll just show you. You took that short, highly successful, right? You re-entered the pool above the pivot, right? Then you took this long, highly successful, right? We came back down. We actually re-entered it again. You took a second long, highly successful. Okay, and so you had 3 epic trades, right? Just based upon the 6 hour, much more relaxing than those scalps on the 1 hour, right? On the 15 minute, on the 5 minute that you do for the 1 hour chart. Here on the 6 hour, you're trading on the hourly, right? So you're probably going to be on the hour, something like that. Probably no less than 15 minutes, but probably on the hourly if you're trading on the 6 hour. And then, of course, if we were to take a look at the daily and what did this look like on the daily, then you could see this would have been the most relaxing trade of all, right? Because on the daily, let's see, we would have called this one out over here on the 8th here. Okay, we had a little bit of a fake out there. Okay, the first candle in the pool is often a fake out as we're having a change in momentum. But then we proved that we had a higher low here. Okay, and so the second one, it was actually based on the trend. We're momentum traders on this channel. So we have to have a change in trend. That's our momentum. And then we entered the pool, right? A little bit of a false start, but it continued to go. You got that epic trade all the way across the pool, all the way to the volatility pivot, came back down, and then again, you took the trade again. So you had 2 epic trades there. And yes, you could have taken this short just like on the 6 hour because we were below the volatility pivot on the daily as well. And if you guys have any questions about the strategy, again, you can just pop over into the Discord. The link is in the description of the video below, and you can just ask some questions. I'm just building this stuff during the bear market just to be ready for altcoin season. This Bitcoin stuff, it's small fish, guys. Okay, like we're looking for the big fish, the big moves in the real bull market, which will probably come in 2024, right? Right now, we're just kind of in a mid-cycle rally, and so it is a bull market, but it's just a mid-cycle rally. And who knows how high we could go, but it's probably not the really big one, right? And so we're just waiting for that time. We're just practicing our skills until that time. Go ahead and join us in the Discord. Go ahead and ask questions. Help me improve the system and make it more reliable for people, and we'll just grow together. Okay, guys? But there you have it. Just wanted to offer that transparency. Just wanted to show you how the system is working, and you guys would not have been you wouldn't have gotten wrecked using the system as long as you understood the rules, right? Above the pivot, right? Above the pool, that's permission to long. Below the pivot, that's permission to short. Right? Below the pivot, below the pool, that's permission to short. And if you just want to trade the pool itself, then you have to have a momentum shift towards the direction of the pool, and then you just enter at the border of the pool, and you can trade the pool back and forth as often as you want. Okay, it's like ping pong in there. Okay, very simple, very simple. And then, of course, you want to be trading on a lower time frame. So let's say we're on the 6 hour right now. Just jump down to the 1 hour. And so if you were trading this daily chart, you could have traded it on the daily, and you could have just had extra confluence by saying, well, am I below the Bollinger Band's midline, or am I above the Bollinger Band's midline? And you can say, well, we're just kind of chopping around it over here. Doesn't look like the greatest entry, right? But you could take a chance if you wanted to. But here we're embedded below it. You could have taken that short, again, below the pivot, below the pool. You could have taken that short under the Bollinger Band's midline. Here we had a change in momentum, pushing to the upside, re-entered the pool above the Bollinger Bands, re-entering the pool. We took it side to side inside of the pool. And then we really probably don't want to be longing into the pivot, unless unless we're taking a long from the bottom of the pool. And but as soon as we get out of the pool, it's hard to say if you want to take a long from there or not. You can do it, but again, volatility is going to be pushing down still. And so really the next longing opportunity, in my opinion, is above the pivot. So above the pool, above the pivot. That's when volatility pushes to the upside. All right, guys. So those are just kind of your rules in a nutshell there. Hopefully that helps you understand. And again, the first move is often kind of a fake out, just as the last era kind of finishes its move, just a little bit of negotiation between bulls and bears there. Guys, that's your alpha for the day. Stay safe and happy trading.